Hello traders and welcome to another video analysis. Today is Wednesday, the 7th of the April 2021. Let's take a look at the Forex calendar. Plenty of data regarding the PMI, manufacturing, composite and services. Data is scheduled for release for today. As you can see, we got some of this data published already. There are PMI manufacturing data from Australia. As you can see, the reading was worse than expected, 55.5 versus 56.2 versus 56.2 last reading. So a little bit of disappointment from Australia, but we are still waiting for the data from Eurozone, basically Spain, Italy, France, Germany, and of course the whole Eurozone. So those data are scheduled for release between 8 and 9 o'clock. 9:30 PMI services and composite PMI data from the UK will be released, and of course during the New York session there are plenty of similar data to be released. Trade balance from US, trade balance from the Canada, IV purchasing managers index from Canada as well. Crude oil inventories for all of you crude oil traders. We'll take a look at this. And we got a speech from FOMC member Charles Evans, but the key event of today, FOMC meeting minutes are scheduled for release 7 o'clock p.m. today. So all of you who are trading the US dollar might take a look on the meeting minutes of the last week FOMC meeting. So let's take a look at the US dollar first. Daily time frame, the US dollar index, as you can see, we hit the level of 161% of the extension, 93.28. We broke just slightly above it. The high was made at 93.41. That's 13 pips. Yes, that's 13 pips. And since then, as you can see, we got this black arrow down here, which indicates the A, B, and C counter trend corrective pattern had been completed. But this pattern doesn't have to be ABC simple correction in form of the irregular flat. It can be something different. But for now, it's the best fit we can get. By something different, I mean it can be more complex and time-consuming correction. We don't know that yet. What we know is the ABC correction, simple irregular flat correction, had been completed at the level of 93.28. We broke below two technical supports, 92.74 and 92.43 already, so just according to the plan, and we are heading here towards 91.72, 91.59, the key technical support zone, which is marked by this blue arrow, of course. If we break below this level and then break below the wave 4 low, 91.28, that means for sure this is the top of the wave C and the ABC correction had been terminated, and we are going to continue the downtrend that euro dollar index, that American dollar, the US dollar is still on. Okay, so please pay attention to this development here, especially pay attention to the market reaction to the level of 91.72. So this is our next target, right? Let's just be more precise. 91.72, 91.59. This is the next target for the US dollar, because there is plenty of data from across the Eurozone. Let's take a look at the euro dollar itself. As you can see, we have completed the ABC correction to the downside as well, and now we are bouncing. 1.1764 had been violated after the target on 1.1732 had been hit. As you can see, this target is closely related to 127% of the Fibonacci extension. It looks like we just bouncing from this level, we bounce above 1.1851, which was the first major technical resistance. As you can see, this is the breakout candle. Very nice breakout by the euro dollar. Where we are heading then? 1.1952 is the next target, of course, and then we are heading towards the top of the wave 4, which is around the level of 1.20. Okay, so any breakout above 1.20 would indicate that the bulls are back in town. The bulls are currently rolling. So 1.20 right now, we are switching our levels, our key levels for observation is right now the key level. 1.20 is the key level to watch, to keep an eye on, because it depends a lot of this level. If we break above it, then of course bulls are in control of the market. Please notice how the bearish divergence between wave 3 and wave 5 played out. As you can see, wave 3 has been made on the bigger momentum to the downside. Wave 5 had not. So we have a clear bullish divergence here. The market has hit the level of 50 points on the RSI. So we are already around the neutral level in terms of the momentum. But if we keep moving higher towards 1.1952 and 1.20, the bulls might be back with the control of the market, and the uptrend should resume, because as you can see, our ABC move to the downside is just a correction in three waves, in a counter trend correction to the downside. Okay, so please keep an eye on those levels. And the last asset for today is of course the oil, because of the crude oil inventories. What we can see here is that we've been trading inside of this channel that's supposed to be a triangle, but it didn't help to mark it as a triangle. So I think that 5-wave decline in the wave A had been completed already. So this is the decline. It ends here with the low of the wave 5, and now we are apparently trading inside of a narrow consolidation, right? And that might be the wave B. So if this is the wave A of a consolidation, or sort of a correction, of course, yes, 5-wave decline, so that would be some sort of the wave B here, right? It will be completed sooner or later, right? And then of course we wait for the wave C to the downside. So the key level here is still the 62.13, which is the top of the last almost the last day of the March 2021. So 62.13. So far it works very nice. The market is close inside of this narrow consolidation. 62.13, 57.9. Any breakout higher or lower will give us a direction. Please notice one more thing, that if we have a 5-wave decline in the wave A, and then we are assuming there will be some sort of the wave B and then wave C, then wave C will be in 5 waves, okay, as well. So the decline in wave C is expected to be violent, is expected to be dynamic, and it's expected to be impulsive in nature. So we can easily give our target levels for this kind of a correction at 54.51 or 50.64, and that would be substantial. It will be substantial and deep correction after this long increase, right? After this long move up. So please keep an eye on this level, because it looks like the decline will be significant on the crude oil. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.